Thursday, 4th of June for the daily market wrap. Keir, we got some strong US data overnight coming in. Can you just tell us what is the ISM Services PMI and the ADP non-farm employment change and what that actually means?
Absolutely. So the ISM, we talked about the ISM manufacturing PMI. It's the same survey that gets sent out, well, slightly different survey, but it's a survey that gets sent out to services managers and purchasers. In the same way that the manufacturers get done. Manufacturing is a bigger part of the US, but services is still quite a large chunk of their economy. So this represents the services side paying or seeing more inflation within their economies themselves. So think about like us, we're a financial services company. They would send us out a survey, say probably to Tim or to Har in finance, and we'd just go through a bunch of questions and tick them off. And these guys are showing they're paying a lot more for their services within the company. So expect that to start coming through to the economy as well.
Okay.
And so in terms of the ADP non-farm, that is the private payrolls. So most people talk about non-farms. That's the government payrolls. The US government is pretty much one of the biggest employees in the world. That's why that's such a big deal. But this was all the private companies. So I think things like us, your Deloitte's, your JP Morgan's, all those guys kind of reporting in via ADP, which is the big payroll company in the US.
Okay. And so I guess which of those non-farm announcements typically has a larger impact?
Typically the government one does because they're such a big employer. But when you've got the government and the private payrolls going in the same direction, it really lends a lot of strength to the economy.
Okay. And Trump downplaying the recent clashes coming out, and the oil inventories had a big miss. So how's that going to impact the pricing going forward?
Yeah, pretty perfect storm really for the oil price to shoot up a little bit. Trump's obviously trying to downplay anything really because he's trying to get a deal over the line, but there were some mines hitting US ships overnight, which obviously it's not nothing. It's an escalation of a war again, really. Trump's trying to play it down, but I think the market is kind of seeing through that. In terms of the crude oil inventories, look, they've come down a fair bit. It just means that when everything gets cleared up, there's just more oil that is going to be in demand to be filling up those inventories across the world, and that's all going to drive the price straight back up.
Okay. And some more unemployment data coming out today from the US. So is this more of a follow-up from last night?
No, this is a different print altogether. This is the government-listed employment claims. So people who are filing for employment claims. So unemployed people. How we get Centrelink here in the US, they have something similar. This is just the register of who's filing for that. So a low print in this is really good for the economy.
Okay, so they will use the announcements from yesterday, today, the non-farm coming up.
Yeah.
And
they all paint the picture of the whole labour market for the US.
Okay. And back home a little bit, central bank speeches from the Oz, UK and the Eurozone today.
Yeah, they could come out with anything. Most of them will be trying to support their own currencies, given what's happening in the US. But it's probably going to lead to a little bit more volatility. But it's kind of hard to see if there's a low number printed in the employment claims. It's hard to see the US dollar not having another big day.
And so, what sort of topics will they discuss in that announcement?
They're not necessarily announcements. They're just speeches at various events. So they'll talk about government policy. They'll talk about inflation. They'll talk about unemployment. People will just be looking for any kind of little tidbit that will kind of point towards their own worldview and how they see where the market should be going.
Okay. And overnight, with the some big moves on the commodities here. So, firstly, with silver. So this is a daily chart over the past 3 months, roughly 2-3 months.
Yeah, obviously you can see it had a massive down day. The US dollar really did strengthen across the board, across everything off the figures last night. You can kind of see silver's kind of going back down towards the bottom of its range. If it cracks through there, it's got pretty open space to to the kind of 200-day moving average and the kind of low from I guess when the Iran war escalated. I've just thrown the hourly in there as well because it's a pretty nice little chart of the straight downward trajectory. If you look at the daily, it's kind of like it's showing it's still got a bit of the RSIs are showing not oversold yet, whereas the short-term one here is. So you might get a bit of a brief pullback, but a bit of a continuation. That's what it looks like.
Yeah, I think one point to note, and back to the technical analysis, which we know a lot of our clients really enjoy using, just the different kind of perspectives that can play out between a daily chart here that, you know, you kind of intuitively look at that and it's flat, and it is. And the same product over a 24-hour looks, looks like a massive trend down, which yes, it is. But you can just tell, like, depending on the way clients like to trade and what technical analysis they like, can bring very different results to different clients. So, and I think it's why so many people like it, because they can really speculate it and make it into their own sort of analysis. And oil once again.
Yeah, another good day. Like, it's kind of just bounced. This is the daily chart. It's obviously bouncing between those highlighted levels that we showed a couple of days ago. Looks like it's tested the 50-day moving average. It looks like it's trying to push back through up until kind of middle of that range. I wouldn't be surprised to see if that kind of has a bit of a test and pushes through in the next few days.
Okay. Kiwi dollar, that is taking quite a dive at the moment.
Yeah, look, it's not performing particularly well economically speaking. Their governor is constantly talking down the chances of rate rises, and obviously you've got that coupled with US dollar strength. So it's had a pretty bit of a rough patch here, and you kind of see it's probably due to keep going down.
And gold, our most favourite product.
Yeah, everyone's favourite product. Another down day, not obviously as much as silver, because silver's a little bit more volatile at the moment, Leonard, but it's just still within that range. It's kind of touching the 200-day moving average at the moment, and maybe we're going to pull back from here, but maybe it keeps going down into the downtrend. So it's one of those ones to just keep an eye out for.
And all these lines.
Yeah, I could probably clear that up a little bit.
Looks a bit like a kid's drawing, but
yeah.
Can you just touch on a few of these? And is this typical of what we see from our clients, and they're trying to
look, these are just prior pricing levels that we've looked at where the market's bounced off. Traders will look at where a pricing line is and where it's been before, and use that as a place to kind of put in their take profit or stop levels. So they're kind of used not necessarily for direction, but more for getting in and out of the trade.
And some big movements on the Nasdaq.
Yeah, big down day on the Nasdaq. Obviously, there was some news coming out of the US. I think it's just kind of, the S&P 500 before last night had 9 days in a row of gains, which is pretty much a flag for any quant-based strategy to say sell now because it's gone for too long. You've kind of seen a lot of profit taking in the Nasdaq. No real news coming out of it. Just it's been up for a long time, and it's just starting to have a bit of profit taken from it.
And what differentiates the Nasdaq, for example, from the S&P 500?
Well, the Nasdaq is the tech stocks, so obviously it's on a different exchange, but is purely 100 of the top US tech stocks. The S&P 500 is a broad index of the top 500 companies in the US, so they'll have everything. They'll have your financials, you have utilities, every single sector that's in there will be represented, and obviously the tech stocks will be a part of the S&P 500.
Okay, so the Nasdaq then, on the back of the AI boom, would be more sensitive to those.
Yeah,
companies.
Absolutely. So you'll see there's typically a correlation between those two, and it's. The Nasdaq will typically run hotter and run colder than the S&P 500 when it goes up and down.
Okay. And the chart of the day here again, some squiggly lines that I'm sure you'll tell us about.
Line. Yeah, this is really just highlighting kind of a lot of traders will see, as you said before, like an hourly chart, the intraday volatility that's going all over the place. But this is really just highlighting the fact that since the start of the year, the USD, which is that blue line over there, that really hasn't actually gone anywhere. It's up very, very slightly. And I just kind of wanted to highlight how, we see a lot of volatility day in, day out. But if you look at the bigger picture, not a lot is happening. So that's kind of where most of the traders will start looking for their own advantage.
Okay. Yeah, interesting. Obviously, the US so heavily involved in the conflict overseas, yet over the past 6 months, almost no movement on the strength compared to other currencies, falling away or gaining.
Yeah,
to that.
You would have thought it would have a lot of strength based off being a defensive asset, but it's obviously not the case. Yeah, I think the dollar Swiss is probably, or the Swiss franc is a little bit higher, and yeah, obviously the Mexican peso is outperforming quite well. But yeah, you would expect it to be a bit higher up, but no, it's been flat for the year.
And obviously Mexico so close to the US. Why do we think this is going up in comparison?
Well, it has no trade friction just about with the US. It's not sending ships anywhere. It doesn't need to go and buy oil. It's actually an energy producer itself. So it has everything it needs to have a full functioning economy and not really be impacted by the war at all.
Okay, interesting. Thank you. Okay, the article of the day will send around after this. Thank you, guys.
Thanks.
Cheers.
Cheers, guys.